All right, Mark Haye in the house, 21st Century Financial Group, 401k scam. We're going to talk with him about that, his thoughts on 401ks. Also, a comparative economy. We're going to break down the differences there. And then the future of politics. Florida Governor Ron DeSantis to debate California Governor Gavin Newsom. It's set. It's agreed to, I believe. Hannity's going to be the facilitator there, moderator. But before we do, I want to jump into a couple of our hot listings, let you know about some of our real estate properties available for sale from the Platinum MVP team at Keller Williams Realty, 605 Monterey Avenue. This is in Clearwater. This is a beautiful property. The owners are motivated. We just did another price reduction, 3 bedrooms, 2 bath, 2163 square feet over at 605 Monterey Avenue in Clearwater. Pool home, screened-in pool, beautiful patio, and gorgeous interior designs on the kitchen. Nice layout and floor plan overlooking kind of an open concept there with a beautiful layout there at 605 Monterey Avenue, Clearwater, Florida. One of our hot listings from the Platinum MVP team. 3416 Crepe Myrtle Drive. This is in Hernando Beach. Waterfront property, bay access. Bring your boat. Enjoy the best of the Florida lifestyle, going out there and going fishing and enjoying the water sports as well. Crepe Myrtle Drive. This is completely turnkey. Could be a rental, short-term rental as well. 3 bedrooms, 3 bath, 1864 square feet, and just a gorgeous design on the inside. Furniture in place. Beautiful, beautiful property. Pavers galore, and a xeriscape backyard there as well with a boat dock. 3416 Crepe Myrtle Drive, Hernando Beach. You can see all of our real estate listings online. PlatinumCoastalElite.com.
Try that in a small town. See how far you make it down.
All right, there's the number one song on Billboard, by the way. Jason Aldean, you heard that one?
Yeah, I heard that one. Actually, there's been some really good concerts in Tampa area. You know, we've gone to Morgan Wallen and Chris Stapleton and George Strait, and I know Snoop Dogg's coming.
I went last week, and I'm going this week.
Absolutely.
I got backstage passes for Snoop this week.
No, we're going too.
No way.
Yeah, we'll see. I don't have backstage passes. Maybe you could hook me up. But.
One of our buddies, one of our good friends is. Her daughter's dating Wiz Khalifa.
Okay.
So he was at our house. We had a wedding at our house a while back. So yeah, that'd be cool. Get backstage to see
Man,
Snoop.
that's awesome. Well, think about me. Shoot me a text if you can sneak us in. Just be two, me and Melissa. So
we'll talk off air.
That's
about
awesome.
That. So Mark Haye, 21st Century Financial Group here on the Consumer Quarterback Show. What are you seeing out there, man? You know, it's a crazy time. You know, of course, the White House is putting out these different Instagram posts about Bidenomics and how it's working and how it's but the real people that I talk to and I see and I hear from, it's not the case, man. It's definitely not the case. You got people struggling. I'm looking for something I'm gonna pull up on my phone. But what's your general consensus?
Yeah, I was going to talk to you a little bit about retirement planning, especially the qualified plans, 401ks, IRAs. And the reason I'm just kind of talking about it, I've been railing about 401ks for quite some time now, is because the people we've been taught and we've been indoctrinated into everybody puts into a 401k, scrimp, save, budget, sacrifice, wait 30 years, and at the end of the day, you're going to have this nest egg bucket of money, and you're going to go retire, and then you're going to live your life. Mm-hmm. So now it's been 35 years since we had this plan, and now we know that there's a 5% chance it's going to work. Mm. So they already came out with a study that when you're 65 years old, 5% of 65-year-olds have enough passive income from their investments to pay their bills. Mm. That means 95% can't quit their job. Wow. Otherwise, they can't pay their bills.
So they're working into retirement.
Right. So now what they're saying is this is Wall Street and government, work longer, save more, put more into it,
yep.
Move to another state that's less, expensive, or even go to Honduras and that's really cheap over there. I mean, these are this is what we're taught, to do. But what bothers me is when you have young people, and God bless them, I'm not saying, don't save, but they put their money into a 401k, and you can't touch that money for 30, 40 years. Mm-hmm. You know what I mean? If an opportunity comes and I want to go do this opportunity, you can't get to that money unless you want to pay a 10% penalty, pay taxes.
Yeah.
So and my thought is you can scrimp, save, and budget your way to success, but it doesn't work. You're never going to scrimp and save to become a millionaire. You don't shrink yourself to wealth, is my point.
Well, and also, yeah, absolutely, I'm with you there, because Tony Robbins wrote a couple of great books on this, and I've read them, and it's it's about the compounding of fees. Sometimes, I think that catches people off guard. This whole idea of a fiduciary. Sometimes they're going with an advisor that's not a fiduciary, so meaning they legally don't have to put your best interest in front of theirs. They can sell you higher commission based products.
Right, and you make a good point. Inside of 401k, people don't realize this. You're paying between 1-2% annually for that 401k.
Yeah.
And everything has a price. Everything has a fee. Okay. But what are you getting for that? What do I get? Let's compare it. Okay. You're going to get no guarantee. You're going to go into mutual funds that you have no idea what they are.
Yep.
You don't even know the companies that are in those mutual funds.
Right.
And then you're going to go into retirement, and then you're going to pay taxes in your partnership with someone that's $31 trillion in debt right now.
Yeah.
That can't even manage to tie their own shoes, let alone money.
Yeah.
You know what I mean? And
Sure.
then when you get there, you're going to be so afraid to spend it because you've been a miser your whole life, worried about money and worried about this retirement, that when you go to retire, you're not flipping a switch and going, okay, now I got money, let's go spend it and enjoy it. You're always going to be like that. Yeah. And so you can either scrimp and save and live within your means, or what I like to say is expand your means.
Yeah.
Expand it.
Yeah.
And like you said, Tony Robbins. Tony Robbins can talk about mutual funds, retirement accounts all day long. It doesn't matter. Same with Dave Ramsey. Could talk about term versus whole life. It doesn't matter. They didn't make their money by putting into a mutual fund.
Exactly.
They made their money by being business owners.
Yep.
And if you can develop any kind of business, and I'm not talking about go off and make $300 million, in multi-million-dollar business. I'm talking about just think about what it is that you want to bring to this world. What do you enjoy? What is the value that you want to bring? Because money follows value.
Passion.
You know what I mean? And then we talked about just silly little things like, oh, my wife loves to buy and sell clothes. Great, start an eBay, business where you could do that. Just something silly. I like to clean houses. Okay, start a little clean business. But the point is, if you can develop your expenses into deductions, you are rapidly accelerating your cash flow.
Right.
Which means you're going to be able to do things. So instead of waiting 30, 40 years to be wealthy, let's do it in 5 to 7.
Yeah.
You know what I mean?
I like it.
And how do you do it? You got your emergency fund in the bank. You put the rest in your wealth creation account, which is the cash value that we talk about, and then you leverage that money into investments that you want to do. I want to own a duplex.
Right.
I want to do Airbnb. My son wants to get a mortgage, so instead of giving the bank the interest, I'm going to earn the interest on it and give him the money.
There you go.
You know what I mean?
Yeah.
So there's so many things that you can do where we can bring income in today, where if you're a young guy like you and I, and we have enough passive income from our investments paying our bills, when we go to work, that's just more money that we can start investing, enjoying, doing things, going out with your family, taking vacations you want to take, and not waiting until retirement when you have a broken hip to go, okay, now we could take that exotic vacation we've been wanting to take. Yeah. And what if you don't make it? 30 years is insane.
I think it's all a great point, and it leads to this whole idea of Bidenomics, especially right now, the way that that dollar is just not the same dollar it was 4 years ago, even. Right. So here's a great text that or tweet that Charlie Kirk put out. Trump's blue collar boom versus Bidenomics. Jobs created in the first 30 months. Trump 4.9 million jobs. Biden 2.1 million. Real family incomes. Trump up $6,400. Biden down $4,000. Gas prices $1.87 a gallon with Trump, nearing $4 a gallon with Biden. Mortgage rate 2.65% Trump, Biden 7%. Inflation less than 1.9%. Biden record highs, and who really knows what that number is?
Correct, because what they tell us is a lie.
Yeah, exactly. We can't trust what the government's putting out in many cases. Regulatory cost per household, Trump cut by $11,000. That's a big part of it too, cutting the taxes, but also cutting the regulations and the red tape for businesses to get their products or services across that finish line and to the consumer. Biden raised it by $10,000, so that's a big deal.
And so everything you just talked about right there, we talked about the government. Why does anybody want the government in their retirement?
Yeah.
That's my point. You know what I mean? They Wall Street and the government didn't do this for the benefit of the citizens.
Right.
You know, they did it because they got rid of the pensions because they couldn't afford it anymore. So we're going to do this. And if you think about what it is they're doing, you're going to lock your money up for 30 plus years. You're going to have this big chunk of money. And let's call it $1 million. You got $1 million inside this 401k. You're going to go retire at 65 years old. That statement is a lie. because you don't have $1 million. The IRS is taking theirs first,
Right.
30%. So you have 700. Now, if the market goes down and you're retiring, just work longer because that's what they tell you. You know, you're not going to run out of money. Well, then you're going to be so scared because they tell you if you spend 4% of your assets, you get like an 85% chance of making it. Okay, so we're going to spend 4%. That's $40,000 a year that you're going to pull out of that and never touch your money because you're just going to live off the interest, right? If you do that model, you're never going to enjoy your money. You're never going to go off and then have that retirement and have that lifestyle that you want because you're going to be so afraid to spend that. And that when you die, you're going to leave that to your wife, and then she's going to be so afraid to spend it that she's only going to spend the interest. She's going to die, leave it to the kids. They're not going to want to pay it because they don't want to pay the taxes, so they're not going to spend it. Then who keeps the money?
Right.
The government and Wall Street kept your money the entire time, and you never enjoyed it.
Yeah.
Never enjoyed it.
It's challenging. It's a real situation here that a lot of families are struggling. You know, they want to divide on race and black and brown, and it's really black, brown, and blue collar. You think about the blue collar and the moderate income, low mid income,
and that's a good point. If you're a middle class person struggling right now, and I get it, things are expensive, inflation is up, you know, pay is down. But if you're putting into a retirement account that you have access to, you're changing your life right now.
Right.
Because now when things happen that, hey, this happened or I lost my job, we can get access to this.
Right.
And at the same time, save for retirement.
Yeah.
You know what I mean?
Sure.
So you can put money away and lock it up and hope one day that it works, and we already know it doesn't. Or you can do things that create wealth today, that create passive income today, that lifestyle that you want with your kids and everything else. Do it today and retire the notion of retirement.
Here's something that's kind of interesting just to kind of lighten the mood a little bit. We got Mark Haye, 21st Century Financial Group here on the Consumer Quarterback Show. So you heard of this satire site called Babylon Bee? It's pretty funny. So White House says Bidenomics so successful, the average American has twice as many jobs as they had 2 years ago.
I saw something like that.
In a press briefing this morning, the White House praised the overwhelming success of Bidenomics as the average American now has twice as many jobs. Thanks to President's wonderful economic policies, most Americans have at least 2 jobs, said the gay black Secretary John Pierre to the raucous applause of handpicked journalists in the room. Our economists ran the numbers, and we found that twice as many jobs as people just as few years ago. So many jobs, success. And then here's another, continues on. Wow, thanks, President Biden, said a local barista, hardware store clerk, landscaper, drive-through worker, Uber driver, Brett Barnes. I'm just swimming in jobs right now. Just a couple years ago, a couple more jobs, and it goes on. And then here's what Kamala Harris, Vice President Harris, says. She also weighed in saying jobs are important. A job is what you do for a job. You know, especially now at this moment in our history, jobs are very important as a part of our history because, you know, jobs are in our history. You know what I mean? Ha 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 ha. Pretty crazy.
I mean, it's sad that they would even announce that that's a good thing that you have 2 or 3 jobs.
Right.
You know, like that's sad. Because that's not the goal. You don't want to just be working, and getting away from your family and this and that. And that's why I say the biggest way to cheat code to wealth is be a freaking entrepreneur, man. Don't go and get 2 or 3 different jobs. That's a W-2 employee. Do a job and then do something on your own and create that. Yeah. And again, take your expenses, turning into deductions. So now all of a sudden, if you have a little business, you can use your home as your office. Now you can start writing off utilities and expenses, and not all of them, but you can. And it leads to so much more wealth. So, again, the Tony Robbins and the Dave Ramseys, we can argue all day long about mutual funds and putting money in the fees, but they made their money by being business owners.
Absolutely. We're going to take a quick break. More with Mark Haye on the other side of this break. Interest rate pause on the horizon. We're going to discuss that. 22-year high on interest rates and tightening lending requirements are also coming. And then also this Governor DeSantis debate versus Newsom. We'll be right back here on the Consumer Quarterback Show, consumerqb.com.
Hey, I'm Ken Shamrock, and you're here with Consumer Quarterback Show. And I say, Brandon Rhymes, knock out your competition.
Cutting through your typical media nonsense and offering you a rational and unbiased perspective on current events and life in Tampa Bay. Online at consumerqb.com.
All right, Florida Governor DeSantis to debate California Governor Newsom. We're going to talk about that, and it's interesting. It's an interesting clip here I'm going to play on that as well. Mark Haye coming up here, 21st Century Financial. Also, what are they going to do with the rates? We're going to talk about the Fed here in just a moment. 9731 San Vincent Way is another one of our hot real estate listings from the Platinum MVP team at Keller Williams Realty, online at platinumcoastalelite.com. This is a property on San Vincent, which is a whole house remodel, complete top to bottom, new roof, high impact windows, AC, air ducts, electrical components, hot water heater, and all the appliances are new as well. 9731 San Vincent Way, Port Richey, Florida. One of our hot listings from the Platinum MVP team at Keller Williams Realty. We also have a property at 6504, that is South Linda. This is in Tampa, and we just reduced this property again. Another price reduction, owners motivated. 6504 South Linda is a property in South Tampa. This one is 1,900 square feet, 3 bedrooms, 2 bath, over a quarter acre of land, updated kitchen and bath, motivated seller, and they're willing to put some money towards closing costs as well. 6504 South Linda Street. You can see all of our listings at PlatinumCoastalElite.com.
Sun is shining, the weather is sweet.
All right, let's jump right into this debate potential here, Mark. So, Mark, we've talked about the difference between the migration from Florida and then, Florida being number one net in migration of 319,000, California dead last out of all 50 states. I think the number was like 547,000. But here's a quick clip I'm going to play about with Governor DeSantis.
The debate between California and Florida, has already been had. People have been voting on it with their feet. They have fled California in record numbers. Florida has been the number one state for net in-migration. We have the number one ranked economy, number one now in education, crime rate at a 50-year low. But in another sense, this is the debate for the future of our country.
That was Florida Governor Ron DeSantis as he accepted an invitation to debate California Governor Gavin Newsom with Sean Hannity as the moderator.
So what do you think about that, Mark?
Well, I will say, because we live in Florida, maybe we're a little biased, but we live in a very good state.
Yeah.
We're positive as far as our cash flow and monies, where California is very negative. They don't have enough money to even pay the bills.
Yep.
They're clearly in debt. They're borrowing money all the time. The one thing I don't like about California is the last week or two and how they made it where it's not really that big of a felony if you start messing around with little kids and stuff. I have a big problem with that.
They're reducing the penalties.
Big problem.
Yep.
And I think Governor DeSantis has done a far better job, superior job as a governor over Gavin Newsom.
Yeah.
That being said, Gavin Newsom has a silver tongue.
Yeah.
And Gavin Newsom makes his stupid ideas sound intelligent because he knows how to convey it, speak it, and then you start going, oh, yeah, that does sound like that would work. So, for example, you got it. So they use terms like dreamers.
Yeah.
You know what I mean? No one wants a dreamer to fail.
Right.
But what's a dreamer? It's someone who broke into this country illegally.
Exactly.
You know what I mean? But they're very good at that.
Yep.
And so I think that Governor DeSantis obviously is superior, but if you go into a debate, you can't underestimate someone that is that political
and willing
can
to lie.
Spin that 100%.
And willing to just lie right through his teeth.
It's hard to debate somebody that can lie like that.
Yeah. Exactly.
So I hope Governor DeSantis takes it serious because Gavin Newsom can speak.
Yeah.
He can speak.
He will. And it relates to this story as well. Portland, Oregon loses $1 billion.
The city of Portland, Oregon lost at least $1 billion in 2021 as residents fled the city.
In the past few years, thousands of people have left Portland and taken their tax dollars with them. Daily Wire investigative reporter Mairead Elordi is here with the details. So, Mairead, tell us about this $1 billion loss.
Hi, Georgia. The $1 billion number is likely an underestimate of just how much money Portland is hemorrhaging. IRS data obtained by the Oregonian shows that in 2020 and 2021, the Oregon county where Portland is located, Multnomah County, lost more than 14,000 tax-paying residents.
Wow, 14,000 people. So that plays right in. I mean, that's California, Portland. It's all the same game there. Seattle.
Yeah, I mean that was the whole thing when they shut down. Basically, went lawless that city, and then they had that autonomous zone and all that crap. And I mean. You got to have laws and civilization.
Yeah.
You can't just run around and not have rules and laws and stuff like that. Otherwise you're going to have like Portland had. You're going to have chaos, and then people are going to leave, and they're not coming back.
Right.
You know what I mean? So I don't know what's going to happen, but I don't feel sorry for them.
No.
Because they put themselves in that situation, and shame on them.
Yeah.
And that's why I say voting matters.
Yeah, big time.
Voting matters, and there's consequences if you vote wrong.
Yep.
And so I get it, man. It's sad. It sucks, and people's lives are there. But you got people in charge that you voted that did all that.
Yeah.
And I don't feel sorry for them. Sorry.
Yeah, and then you see some of them crying on social media, TikTok videos, crying about, I'm scared to go out at night. And well, you keep voting for those people.
Yeah.
And did you see the video? There's a great video on Instagram or one of them where this guy they have these big old barrel, basically a trash can, and they're just filling it up with high-end purses. The guy was stealing cigarettes.
Yeah.
And the one guy holds him down, and the other gets a stick and he starts beating him.
I saw that. But the thing about it, immediately I thought about that is, okay, now he's going to get in trouble.
Right.
Because he beat up this guy that's robbing the store, and he's going to get sued now because he's going to lawyer up. Because I think there was something like 20 million lawsuits last year in the United States alone.
Wow.
There's 300-some million people? That is an exorbitant amount of lawsuits.
Yeah,
you know what I mean? And everybody's like, oh, my car insurance went up. And this. Well, everybody keeps suing everybody.
Exactly.
They're not just going to keep paying that. They're going to pass it to the consumer, which is your premiums.
Yep.
So...
And the federal government's leading the way, by the way.
Oh, 100%.
Look at all the fraudulent cases there with the federal government. Just a couple minutes left. I wanted to get to this story and get your response on it, Mark. Interest rate pause on the horizon. A September rate pause is looking increasingly likely, Wall Street economists say, amid milder than expected inflation, moderate consumer spending, and lessening wage pressures. Federal Chair Powell had left open the possibility of another rate hike after raising rates to a 22-year high. We're at a 22-year high right now. Two key events that could determine the Fed's choice: the resumption of student loan payments, which is expected to be modestly negative for consumer spending, and the possibility of a government shutdown, both of which could happen in October. Also at play, banks are tightening lending requirements, making loans, credit cards harder at any point since 2008. Your response, 1 minute.
I just think that the interest rates are going to have to go up. And then, everybody's railing because the stock market's going up because of the interest rates have tapered down and this and that. Stock market's not up. It's up because of 5 stocks.
It's
Amazon.
Falsely.
Yeah.
Right.
So if you're not in those 5 stocks, who cares if the market's up? You're not making money.
Right.
So I think they're going to have to raise the rates, even though they said they're not going to. You're going to have to because they printed way too much money.
Yep.
And unfortunately, we're gonna get that. We're going to get the effect of it again.
How do you want people to connect?
727-804-7220. Again, 727-804-2220. And if you want us to help expand your means and become wealthy 5 to 7 years, hit us up. It's easy.
Get in touch online to
XXIFinancial.com.
XXIFinancial.com, 21st Century Financial. Always a pleasure catching up with
Absolutely.
you, Mark Haye.
Thank you so much. You have a good day.
Buddy. Hey, likewise.
Thank you.
Absolutely. Well, hey, another great show. Patrick and Ann Furlow, Step by Stage Interiors, Mark Haye, 21st Century Financial Group. We cover a lot of ground there, and it's an interesting scenario that we're at here. It's an interesting place we're at. So we've got to spread the word, spread the good news of hope in our country, and pray for our country. Lord knows we need it. Please go out there, consider committing a random act of kindness, do something kind for one another, be a force for good in the community, and we'll see you next time right here on the Consumer Quarterback Show, consumerqb.com.
You've been listening to The Consumer Quarterback, Brandon Rhymes. Whether it's real estate, consumer, or financial advice, let Brandon call your next play.